Hello, everyone. My name is Manoj Agrawal. I'm the group editor at Banking Frontiers, and I welcome you all to a fantastic panel discussion today on a very interesting topic, customer engagement, a hierarchical strategy. To introduce the topic, a hierarchical model is a very common and effective way to understand so many things. A hierarchy in an organization gives a very clear picture of what gets decided where. The government too works in a hierarchical model, whether it is the legislature, the judiciary, the law enforcement, or any other departments in the government. Hierarchy is not just something that is man-made, it is there in nature as well. If you look at the living world, there is human beings at the top of the hierarchy, and there are single-celled animals, single-celled organisms at the bottom. So many places in nature you'll find hierarchical models. I am particularly fascinated by Abraham Maslow's hierarchical model, as it very neatly explains the working of the human mind. And the human mind is something that is really fascinating. Since financial products and financial services are increasingly taking more and more attention of the human mind, I think it is worthwhile to explore how financial services can adopt Maslow's hierarchical model, Maslow's pyramid. And hence it is my pleasure to have our fellow panelists from the NBFC sector to talk about a hierarchical model for customer engagement. And I'm happy to welcome you all. May I request our panelists to briefly introduce themselves so that we can then get into the panel discussion. Can we start with Anjali?
Hi everyone, this is Anjali Chadha. I am taking care of operations and customer service in IIFL Home Finance Limited and IIFL Finance. I am basically from mortgage industry and being in this industry for last 23 years. Started my career from Canfin Homes Limited from the basic level. So have worked in all aspects of this industry, from credit till operations. And sometimes recovery too.
Okay.
Yeah.
I did my CA in November 2006, and then I started my career with GE Capital. In GE Capital, I was part of the finance team handling the global finance there for their leasing, aircraft leasing, fleet business, especially in Europe. And then the restructuring happened. They make it a EMEA segment, and then I moved to India. Being GE with for more than around 10 years, and then GE sold its business to Clicks Capital, which is being founded by Mr. Pramod Bhasin. I worked there for 2.5 years, and then I got the opportunity to work in PC Financial as a CFO. I joined here because it's a new segment in digital lending. So that's the area which I explored in last 2 years. We set up all things and infrastructure, and make it one of the biggest digital lending player in India. In last 2 years, we worked.
Yeah, thanks, Manoj, and hi to the panelists over here. So I come from a banking industry with 27 years of hardcore banking, and worked with various banks from private sector to the new age banks, payment bank, as well as the small finance bank, and also the MNC. So I've worked in a range of varied environment in the banking sphere, largely been involved in setups. So I have been right from the beginning involved in building things in many of these banks, and last two space has been where we've been part of the setup of the bank itself, like the Aditya Birla Payments Bank as well as the Ujjivan Small Finance Bank. So that's the space I've been working with, and my expertise has largely been banking operations and technology, and obviously now the the hype word called digital banking. So that's where the experience has been. This is my first stint into an NBFC, which is Indostar Capital Finance. So I'm the Chief Operating Officer with Indostar Capital Finance. And I've also here, my responsibility is operations, technology, and customer service. And obviously, one of the space that we are looking in a big way, and which is happening, which is the talk of the all the NBFCs, is a digital lending space. So building the entire interfaces for building the building the entire lending space through the digital model. So that is something that we are working on, and we'll probably go live in the coming 2 to 3 months time. So I'm also actively involved with a non-profit organization called Aspire for Her, which works very, very closely and for building the diversity ratio in the country, and a subject which is very close to my heart. So that's it. So that's from me.
Good afternoon, all. I'm Kailash George. I'm from Speridian Technologies. I'm heading this product and innovation, especially for this banking and finance industry. We have so many products we have. I'm heading that actually. I'm here in this industry, especially for this banking and finance. I think I have around 20 years of experience in this segment.
So all of us have plenty of experience combined. With Sanjay Sharma joining, all that will add up to more than 100 for sure. Okay. So my first question. So let me give a one-line explanation of Maslow's pyramid. There are 5 layers in Maslow's hierarchy. These are physiological, safety, belonging, esteem, and finally at the top, self-actualization. Among the various financial products that consumers consume, let us understand and explore what products fit where in this hierarchy. And if we can do that, that would actually start opening up a lot of ideas. So what information would a lender like you typically need to identify needs, consumer needs, and which financial products are appropriate for those needs? Housing loan, car loan, jewelry loan, marriage loan, education loan. So there are so many financial products, different tenures, different rates, meant for different products. Who would like to share something about a match between financial products and Maslow's pyramid?
So I feel the first layer is physiological need.
Yes.
So what I feel is that the need, what we see across the world today, is being self-reliant and Atmanirbhar Bharat, if you would say. And so that if we compare with the financial product side, I think microfinance is something which is the physiological need today. So that makes everybody independent and self-reliant, and then they move into the next level of safety, that once they have that source of income and independence to work and sustain themselves. So sustainability, I think, is the first thing which microfinance industry caters very well by funding to the small groups in rural areas, even supporting women. Say, for example, community funding. They are making the community, when we see a bigger example, it's like Mother Dairy, how they started and how they have reached to that level. So the small communities, small groups in the rural areas who want to make a difference to the society. So I think the first layer comes there, and as per me.
Okay. Who would like to talk about the other layers?
Manoj, I think this is a good starting point, to tell you honestly, because none of us as lenders actually look at this piece. This hierarchical need is never looked at, okay? Because it's basically looked at the market, which product sells more, which is an industry that you want to get into, and that's how most of the organized. So, for example, many of the NBFCs concentrate. For example, you have NBFCs which concentrate only on housing. You have NBFCs which concentrate on 2 or 3 products. Okay, so you have organizations which focus on what products they want and how the profitability is built on it. Impact is very, very last in the, unless and until you're an impact organization per se.
Okay.
So therefore, the hierarchical, Maslow's law of hierarchical needs is not, according to me, no one even looks at this when we come to a product building. So that's why I said it's a good start point for us to of this discussion. Now, while Anjali spoke about microfinance, and it's a very good example, according to me, because the financial inclusion that we all speak about actually stems from microfinance. That's exactly where you go to an underbanked location, you build the community model, and then you kind of start, giving them the basic needs and obviously bring them up in the ladder in terms of their growth, and then slowly their needs. And after I worked with Ujjivan Small Finance Bank, I've actually seen how the impact happens to women, where you have actually gone and seen women who did not have basic funds, came into a community, got a microfinance loan, and slowly their standard of living started increasing. So from with nothing, building a house, to building, getting some a shop being set up, or some business being set up. So that's where, and she rightly said that that's a product which actually starts with the psychological physiological needs, which is taken into account. Now coming to the next one is in terms of safety needs, and where that's one of the product that we can link very strongly is your housing. Because the affordable housing, which is a product today, when we speak about it, is purely in terms of giving safety to your to the people at the ground level, a shelter over their head, and obviously with a lot of schemes which is coming up from the government after the during the so therefore and the ex-gratia that came into picture, the subsidy which came into picture actually gave a strong support in terms of the affordable, which made sure that we need to ensure that everybody has a roof over their head. So a product per se, if you look at most of the I'm giving this because after I've seen this in many organizations, product is not based on the fact that who is my customer is rarely in the picture. Okay, you're building a product for the customer, but is the customer in the picture when you build the product is something which is very hardly people really look into the factor that which is a segment I need to get into. Are these customers, for example, when we speak about digital, do you think your tier 2, and this we spoke yesterday also, if you remember, Manoj, in our discussion, tier 2, tier 3 city customers, are they truly digital? Do they understand digital? Do they understand, or are they the ones who actually deciding that after my afternoon lunch, be like, what should I do for my evening lunch? Evening dinner. How do I get the money from? These are the people who are there, and you're looking at giving them a house, which comes under the affordable housing. So how do you make sure that this product is reached? It reaches them. They are able to take advantage of the schemes that are available. How do you make it easy for them? Does it reach to the people that who wants it? Some of these basic questions, I don't know whether people really sit across a table, talk to customers, take a survey, understand, and then build a product around it. Typically, when you make a product, it is actually you need to understand who your customers are, what they want, how is it available, who are the people who give in the market, can I afford that? And then afterwards, you build a product around it. So you as an organization also make money. At the same time, you're also making an impact to the guys who are actually wanting it. So safety needs, I'm just talking about one product right now, because that's a big piece, which is today, all of us are speaking about in the industry, affordable housing. And many of the organizations, the big ones, have actually created a huge asset base with the affordable housing. So does this actually, do you actually look at who your customers are and then go and tell them, okay, this is a product that I've created for you. So that is something which is very critical for us when we actually build a product. And this is my view. I'm sure the others would agree. How many of us sit on the table and then say, okay, let's look at our customers. Who are the customers? What do they want? Are they okay with these kind of interest rates? Will they want, a 35 lakhs, or do you want to make a bucket of 10 lakhs? Is it a self-funded? Is it a salary? Is it somebody who is, who has one person working, 2% working? Product with a multi-combination is very critical, because you can't use the same flow what you're doing for a 1 crore loan to a loan which is of 15 lakhs. It is, if you go and see the ground level, there is absolutely no difference. You ask the same documents here, you ask the same documents here. Are we making it easy for people to actually use this is a big question that we need to address.
Is this customer understanding in building the product, is this happening in other parts of the world, or is it the same world over?
So I totally agree with Jaya, but I would like to also add that that's what we are doing here in IFL Home Finance Limited, that our segment where we cater to the customer, it's an unorganized sector mostly. We give a loan by the name of Swaraj, where the people who do not have that organized income, that's how we reach to them, we fund them. As far as the digitization is concerned, we are digitally strong internally, and that's how we reach customer through, we have a tablet where our sales executive go to the market and they fund the loan. They are able to appraise on site to the customer and give. So it's not necessarily that at the initial stage customer needs to be digitally savvy. It's first the companies which need to be digitally savvy, and that's how we strengthen ourselves. And down the line, we can educate our customers to use digital platforms to get the service they want. And I think Paytm is a bigger example there, that earlier we used to think that it will not work, but now everybody is using Paytm. Even a local vendor, ice cream vendor, or a fruit vendor, everybody is using Paytm. So I think people will get used to use the means of digital resources down the line. But the first thing, we need to be digitally strong. We need to reach out. We need to educate them that how can they make a house of their own by availing the PMA schemes or CLSS schemes which government is providing. So yeah, I totally agree with Jaya. Affordable housing is the need, which safety need for every person, and in India especially, where people do get attached to their homes, and it is a, I think I read one RBI survey also, where the first thing people invest on in their life is to build a home. So that shelter is very, very important for people, and it is across all the segments of the society. May it be like at all the levels in the society. That first thing you want, you start earning. Once you have a flow of income through microfinancing, the next thing what comes to your mind is to have a home of your own. So I think affordable housing and this PMS scheme is definitely helping that cause.
Great, wonderful. Raghu, would you like to comment on any other kind of loans that are at the higher levels of the pyramid?
Yes, see, basically earlier, like G Capital, if I give example, the mostly focus was on wholesale lending, like B2B loans, aircraft leasings. So in those cases, you have, the large number of your funds are blocked with the very limited customers. If I talk about your 80% loan is with 10 customers, and the rest of the loans with the small into bit and pieces with the multiple borrowers. But that gives you maybe some kind of surety when you do the credit rating for those customers, that you are very diligent about like to whom to give loan, who is a AAA rated company. This is a the ratings matters a lot in those cases. But this rarely helps to make you as an the public brand, which consumer brand, where which is like in after digitization. So the success lies like how many customers you have, and how big population you serve, and how quickly you serve them. So somewhere I will say that so in the current market, only those players will survive that. Who cater the mass of the consumers in their, maybe it could be like MFIs who are doing physically giving loans to unbankable population. They understand their needs and then they give them loan, and because this is all unsecured market when you talk about the personal loans. So that's why the other data points plays a key role while making a decision to whom to give loan, what is the purpose of the loan, how you will differentiate that this is a genuine customer or whether his ability to repay the loan. So so that's a good point actually, which we are discussing today, like Maslow theory, where we can understand our customer in a better way. Not only basis of their basic profile and their credit score. So these segments, these fields will also help to understand the customer better.
Yeah, that's true. That's true. Great. Let me come to Kenneth now. Let me ask you, when an NBFC wants to use an LOS system, either for creating a loan product like Jay described or for modifying it, how good is your system? How does it help a lender? What kind of new data can the system allow the company to add? How does it give more power?
See, yes, we are also providing so many features to, enable it's flexible actually. So each company may have multiple product owners or product head. What we are providing is that the product head can vision their product and they can design and they can set the data, which are the data required for this product. Likewise, we are enabling them to configure based on their requirement. That is for that we are adding so many technical features. Yes, of course, we are adding that. Normally, while issuing, one lead is there, then the company may be collecting very minimum data for the initial study and all. No, so once the company or the executive identified, okay, this customer is eligible for the loan, then based on the scheme, the data capturing engine will work. Yeah, see, sometimes the customer may be coming for a very a mini hatchback. Yeah, then they may be collecting some data. Or the first case, as ma'am said, no, so somebody coming for a micro loan, or it may be a microfin type of group loan, or in small bucket loan. Then Aadhaar and voter ID may be the maximum thing. Sometimes they may require this bank account details also.
Okay.
So if the customer is coming, the same customer is, or the other customer is coming for a car loan, then we need the salary statement, bank passbook statement, all this stuff and all. And if the same vehicle loan, if the customer is requesting for a luxury car, then again ITR become a mandatory thing. Likewise, we can define the workflow for the data captures. Workflow, yes, again, LOS have a different workflow. What we are providing now, we are enabling the IT team or the admin group or the IT officers to group these concepts based on the product owner's visions, actually.
Okay.
In the product itself, they may have multiple workflows for data capturing and the further processing and all in the same scheme itself. So based on suppose in the case of vehicle loan, different car segments may be there. So based on that, we can define a different workflows in the scheme itself.
Okay.
So flexibility we are providing. In addition to that, yes, they can create new field. They can make it as mandatory, and again they can hide some field for this particular case. And again, if they're looking for a new forms, yes, they can create, and they can create their own workflow. Okay, if it is a small bucket loan, we need only 3 steps. If it is a big bucket loan, yes, I need 7 steps. Likewise, we can configure. That type of flexibility we are providing to this admin team, and see, all these things are based on this maker checker concept. See, once they created, they need the product owner's approval for that. Likewise, and we are maintaining the audit trail for everything. In addition to that, I need to highlight one, 2 points. No, see, first one, yes, alternate data capturing concept. No, sometimes the customer may be coming with may not be the customer may not have something. Okay, 1, 2, 3 documents required for this particular loan, and this customer is coming with only 2 documents. Yes, in the system itself, the backend system will automatically recommend, okay, this customer is actually eligible for the loan, and we have this alternate data option. Here, 1, 2 options are not available, documents are not available, then we need to go this way. Even now, we are providing this mobile data analysis, social media analysis, and all. If the customer may not be having this Aadhaar card or XYZ documents, then we have a parallel another mechanism to analyze the customer. And again, we are adding this overriding concept also. So, say based on the lending policy, okay, the customer is genuine, everything fine, but 1 or 2 exceptions are there. So it will automatically escalate to the next level, and they can override that and they can approve that. And we can make sure all these things we are maintaining the audit trail, and see if proper approval mechanisms are there. System will work in that way only, but we are providing the maximum facility to the NBFCs and their IT team. So we need to avoid the vendor dependency to vision their products and configuring these products and all. No, we are providing this much facilities for this.
That's interesting. It's interesting too that the concept of alternate data is very important, because in today's rich world of rich data, why should one get stuck up on one piece of data or one kind of data? My second question to the panelists is, you take the example of a two-wheeler. I could be wanting a two-wheeler let's say someone is working as a courier delivery person or a food delivery person or something. For them, it's a professional, it's a work-related vehicle. For someone else, the bike will be for leisure and cruising and all that. Maybe even a high-end bike as a status symbol. I'm a person, someone having a 500cc bike or something. Obviously, that is like a Harley Davidson. It's not a need based. You're not going to use a Harley Davidson for doing deliveries. That much is sure. so the same product, a motorcycle loan, can be in one layer for the Maslow's pyramid and in one or two layers above that same pyramid, same layer in the pyramid. So how do you see lenders handling that more meaningfully and not just treating every bike loan as a bike loan, every car loan as a car loan, any loan as a fixed kind of loan in the hierarchy? What if it is somewhere else in the hierarchy? How will you treat it?
So, Manoj, I'll take this question because it gave me a very interesting insight. Because see, for a lender, it's like let me do a very simple comparison with your SB account, right?
Okay.
You have a 5,000 rupees in your account, right? You may be one of the richest man in the world, right? Or in India. You may be keeping 5,000 rupees in, let's say, X bank, right? And you will continue to keep 5,000, right? So ICICI Bank will treat you like one ordinary customer, right? You come into the branch, you call up, he will not pick up your phone, whatever it is, not knowing that you're one of the richest man, because 5,000 rupees is in his bank account, and therefore he will only give you that much of attention. Okay, if you go there and all that. But at the same time, suppose if you're keeping if you have a huge amount of deposit in the bank and all that, then obviously he'll come to your house to take your checkbook. He'll come to your house to do all the work for you. You'll have a relationship manager for you, and everything for that matter he will do for you. So if you do a comparison with that for a lender, right? A lender is interested in what? A lender is interested in the yield that he'll get of the loan that he's giving. That's it, correct, right? So it all depends upon. So to answer your question very simply, if you have asked for an small amount of loan, and if your credit rating is not good, you don't have a credit rating, even if they just kind of say that, okay, fine, loan rejected, you're out of the system. But if your requirement was for a Harley Davidson and the amount is high, then you will obviously have the lenders coming behind you to check what went wrong, what we could do, what is the documentation we should do, how should we make you, how should things, because it's a value, and it's a value as well as it's a yield related to that value of that loan that they're giving it to you. So it is actually, so that's what I'm trying to kind of, in the beginning also I said, is lender actually looking, so and other than the microfinance companies in its original days, now I think that's also gone a lot. Original days had its real value or real outcome linked to the objective for which they were set up. And many of them have come up the way because of the microfinance. But if you look at lenders who focus on value, who focus on yield, who focus on profitability, who focus on what is that, the portfolio analysis, portfolio quality, collection, they hardly will bother about, whether this bike is for a Swiggy guy or it is for a guy who is staying in one of those rich quarters who wants to buy a Harley. It's the value that matters a lot, right? It is never linked to the user of that particular user of who's buying it. So it's a very, very clear, very commercial linked attitude all of us have. When I say all of us, being from an NBFC, I will always, that's why I'm using the word we. It's a very commercial linked transaction. It's a value. It's a value of the transaction. It's a yield of the transaction. It's where it all depends upon what's the value, what's the yield you will get, and who's the customer. Not because that poor guy did not have a credit score. Should I help him get a credit score? He's a Swiggy guy. It is because he needs his bike and therefore he'll get an employment. No, nothing of this.
Very clear.
It's a hard truth. It's a hard truth. I mean, I'm sure Anjali and Raghuvi will agree, but it's a hard truth actually.
I totally agree with you, Jaya. But I also feel that risk-based pricing plays a role there. So if we have a higher risk, we take a higher price. And if it is a lower risk, basis the repayment capacity of the customer. And over a period of time, when a customer is captured or say is taken on the board and they start improving their credit score, so their pricing also goes down. So it's a win-win situation for both the companies as well as the customer, depending on the various stages of their relationship with the lenders.
Okay. Let me come to Raghuveer with a little refinement of this question. So is there a growing and profitable market for, let's say, luxury cars, luxury homes, expensive products? And to grow business in that direction for an NBFC, does it make sense to partner with manufacturers and dealers of these kind of products? Or does it make sense to do more of your own marketing? Take a bungalow loan from me, take a Jaguar loan, whatever it is, What is the opportunity and what is the approach to that opportunity? And how big is that opportunity at the upper levels of the pyramid?
Yeah, I understand, but our business model is totally, a small ticket loan mostly for the physiological needs.
Okay.
I would give you one example, like for the luxury products. If someone looking for a loan, so I would say he would have 100 of lenders who was ready to give him loan, and in that case, his yield will be lower. I would say there is a high competitive market where everyone wants to enter, and a simple example is, the higher the risk and higher the return. So at upper bracket, I would say the risk is minimal because the credit worthiness of that buyer would be much higher. Who is buying all these goods, and there would be some reputational things which don't allow him to do default in those kind of loans.
Because in general, are NBFCs avoiding these big ticket loans and this high risk loans?
No, they're doing, I would say that give them comfort, like a risk-free portfolio kind of thing where they can, minimize their risk. But I would say if you are growing NBFC or a player, so to deal with the masses is the biggest challenge right now in India.
Okay.
Yeah, that is the toughest part because
I understand.
The demand is high and risk is also high, and definitely on that you will get a good return also if you build lot of on your the digital and other platforms.
Okay. So these high-end products are perhaps catered to by banks or others, institutions. Could be, yeah. So let me ask Kennels then, in terms of using technology, how can it help a lender navigate and map a suitable product to a suitable lender? If a client is asking for a product, if a potential customer is searching for a product, a lending product, and of course, even in there are a whole variety of products. How can technology help the customer or the NBFC executive find the right product for the right person? It's not just one product.
See, here are two things I need to highlight here. First one, in the case of existing customers, so what we are doing now, normally this we have an internal rule engine that will sit on the top of this LOS LMS system, and system will this engine will work with the current running accounts and all system and customers and all.
Okay.
This engine will communicate with CIC, third-party aggregators, and from all the resources, this engine will collect the data and see if, from there they will get, okay, somebody searching for a different loan. Even mobile data search also we are using. See, if somebody is searching for a different types of loan or somebody searching some other company's websites, see, we are getting the data and see, we will capture and process it. Okay, which type of loans they are looking for, and what we are doing now, we have their own transactional data. Now we are comparing their past transaction history and all, and this rule engine will auto recommend. That's the highlight. The rule engine will auto recommend the special loans to that particular customer. So what we can say now, see, the customer may be searching for a different type of loan, but we may have a best fit loan to meet their requirement. This engine will recommend that based on this transaction pattern, customer behavior pattern, and so many analysis. Again, we are collecting the data from third-party aggregators and CIC also. We are getting, periodic updates from there also. So based on that, that auto recommendation will work. And this,
in a sense, manual search becomes automated.
yes. And this auto recommendation, yes, companies will send to the customers in the form of SMS, voice call, email, WhatsApp, and so many ways they are alerting the customers. Okay, you are searching for this. We have best fit for this one. So, like I said, what we can say, work like a matrimony site now. So, the customer searching for something, and we have we are finding the exact match, and we are recommending the same thing. So, interesting. And the same thing they are doing for this new leads also. They are also processing on the new leads, and the recommendation will send to them. So that's first method. First thing what we are doing in NBFCs and all. Second point, now see, JMM actually highlighted this point actually, the packaging of product suit for best fit for this customers now. This is especially required for that new customer acquisition part actually. So see what we can say. We need to package the loans effectively to the customers. See, nowadays, in our region, Kerala, the Onam celebrations are coming, and you know that now here the corona cases are more, and most of the, I think last 2, 3, 4 months here is in lockdown. Nobody have money actually. See, now one of my NBFC coming with a special festival offer. You can take the loan now, and you can start the repayment after 70 days. And so this is based on the current need, they are packaging it effectively. And likewise, previously you know that these government employees are mainly taking loans from these PSU banks, government, cooperative banks and all. Nowadays, the NBFCs are coming with better offer to them to serve that segment also. Very competitive rate, and anyways, we know that competitive risk are less, but we are giving them very competitive rate to the customers. Likewise, we need to package the schemes or our loan schemes or products to target different segments. Yes, the solution should have all these facilities also. Anyway, we are providing this type of packaging solutions, promotional supports and all. No, so in that way, we are supporting this NBFCs and all in this segment.
That's a very interesting example for that NBFC to come up with a Onam loan, then someone will come up with a Christmas loan or a Diwali loan, and monsoon loan, summer loan, winter loan. I can imagine all kinds of new offerings. And packaging sounds like something that every industry is doing a good job of packaging. So why not the lending industry also? Great, let's move ahead then. If an NBFC has a multi-product strategy, which is probably happening in most NBFCs, does it make sense business-wise and risk-wise to stick to one layer of the pyramid? Or is it better to spread the risks and be there in 2 or 3 layers? So that if something drastic happens at one layer, then at least you have some continuity, business continuity, some cash flow continuity from other layers. Does that kind of make sense? Is that a good strategy, business strategy and a risk strategy?
Yeah, I think it is. And also the economy is cyclic in nature. So it's makes sense to have multiple products on the platter, and also the customers are at the different layers of hierarchy at different times. So if you have one customer, the need may be basic at the moment, but they may translate into a higher hierarchy needs in the future. So servicing your customer in a wholesome manner is definitely something which NBFC can also gain from. And then you have a ready credit score for that customer. So offering multiple products without repeated underwriting brings down your cost also. So it makes sense to have multiple products, in my view.
Okay. I'm actually reminded of a top-up loan. So someone has, let's say, taken a home loan, which is a basic need, shelter. And then you want to do up the house, decorate it, paint
you want to renovate, you want to buy some accessories, some gold, or maybe a car to match your house.
Yes.
a vehicle. So I think it makes sense to have multiple products and cater to the customers, even having a secured loan like a home loan, and then your outstanding goes down in the near future. So within the same say market value, you can fund for another need of the customer, keeping your loan secured at the same time. So it makes sense to have multiple products.
Jay and Raghuveer, I presume you agree, but do you have something interesting to add?
Yeah, just to add one thing, like, through whether you're doing marketing channels or other channels, you source customers only when the customer needs money, right? You can't force loan to him.
Correct.
Once the customer is onboarded, then the relationship is started and the trust is built between you and the customer. So then I think it's easy to cater and understand his needs, to offer him some more products. Cross-selling of various products to the same customer is easier than a customer. So
yes,
let's suppose one person is looking for a medical emergency loan. He comes to you, you immediately give him the loan, and he will be thankful to you. And next time when you offer him some another loan, maybe that loan is for another product or other the requirement. Maybe he is not need that loan at that time, but if you then just showcase your the whole bunch of products to that single customer, so definitely he will to give the first preference to that partner. So in that case, the chances of doing default is also lesser when the customer is taken multiple loans from you.
Jay, is that also your experience that correct? Multiple loans makes defaults lesser?
I slightly differ here, Manoj, because the way I look at it is it's the same, it's same to the way of concentration risk, right? If you concentrate, if you concentrate to a segment of people, and if like, for example, the last 1.5 years where things were really bad, people lost jobs, your entire portfolio is gone, right? Your entire piece is gone, whether it is whether you have given him top-up loan or whether you have given him, it's all gone, because then
the whole segment is gone.
The whole segment is gone. So and if you look at most of the NBFCs which are on multi-product model, they have obviously each product has a profitability and each product has a segment customers. Cross-selling is obviously there, and that's no doubt about it. But the way they target their customers independently are very different. That's one part of it. So, for example, if I have to give you an example, many of the microfinance organizations today who have got converted into banks, and if you go back to the asset base and see, they're trying to reduce their microfinance asset portfolio and bring the other products up, because the pricing wise, the profitability wise, they will actually be able to get more. And see, so even in this market, when microfinance went down, some of them still withstood the pressure of it because the other products gave them the profit or the collections became better. So when the whole turnaround happened, the whole thing started working, the collections of the mother product started building much better rather than the microfinance is still struggling in many of the spaces. So in a multi-product organizations, the way they build is to generally balance the low yield versus a high yield product and the outcome of both these products put together. So because in top up, if example, if you're giving a top up loan to a guy who is into affordable housing, and if you top him up with more loans in a situation like this where he's not been able to pay his initial EMI, you're only going to default, right? Then you have a moratorium, and then you have a restructuring, and then you have the other challenges that will come along with it. So it's actually not a very, according to me, what Raghuveer said, one point is very correct. Customer loyalty is one part of it. He remains with you, and every organization make sure that the customer does not go out from you, and he remains with you for all his other products. But you have to see how it has to be diversified and not just focus on one part of the same segment with multi-products. That's where I differed. But yes, there are some, while we agree on customer,
loyalty versus risk management, the balance has to be done.
Yeah, very.
From IT perspective, Kenneth, if I may ask you,
yes,
how does IT help a lender analyze the risks, the loyalty opportunities, the business opportunities?
Normally, what we are doing now, these NBFCs, they will implement this one business intelligence system on the top of their LOS, LMS system and all. No. So this system will support them to take good decision on right time. So that is a normal practice of what I'm seeing here. We are also doing in that way only. See, this analytical engine will tell them the profitability. See, they have the multi-dimensional analysis capability that engine have. So what they did is then also it's collect the data from different sources and process it and store in a data warehouse. And I mean, every time they alert the correct users with, okay, you need to take this decision in this time. Okay, this is going in this way, likewise. And here it's coming, as ma'am said, no. So all the things, profitability analysis, product-wise profitability, then how the product is performing in each region. All these things are coming in that way. And the same way, we are analyzing the customer attribute-wise analysis also, like the gender, age group-wise, profession-wise. So many analysis we are adding to the system, and these results will support the lender to take a good decision whether we need to go to this region. Sometimes, yeah, this product may not be work in that particular region. And sometimes, okay, we can go this another area that may be good. Such type of decisions, the decision support system will support to take that type of decisions. And yes, we are doing so many minings also, and from that also we are giving so many input. Sometimes it may be very small thing. So as ma'am said, vehicle loan industry itself, no, here in South India, one of the NBFCs, what they feel is that also they have out of their total loan portfolio, around 99%, yes. They are in two-wheeler loan, and they are only doing this two-wheeler loan, and they are a total out of total portfolio, they are lend around more than 90% only to the gents, and only less than 10% they issued to ladies. And out of this ladies portfolio, the 99% they are getting regular collection without any follow-up. That they said. But for the other cases, no, they need around more than 40%, they need to do the continuous follow. So that type of, okay, then they change their strategy to, I mean, they're planning to lend more into the other segment and all. No. So that type of decisions we can take based on this analytical system and all. One more point I need to highlight here. No. So the analytical system is nowadays now coming with this detailed what-if analysis mechanism. So a minor change in the interest rate, how it will affect our total profitability, how the customer will respond to that. That also will get the indication from the system. And if maybe a change in the charge, maybe a processing charge or XYZ charge, okay, minor increase or decrease in that, how it will affect our profitability and how it will be going to reflect on the customer side. That also we will get the result. See, likewise, we can do a detailed what-if analysis also, and based on that, we can take good decisions and all. Again, see what we can say. If you are going planning to go entirely different area, then we have this data with the aggregators and all. No, we can there in that area. How is the loan spread and how is the overdue nature and all? No, we have the data in the industry data. So we can compare and we can study from there also. Okay, if you are going with this product in this area, okay, the customer may be responding to this in a different way, and we can plan a good product to that particular area. Likewise, we have industry data, we have our own data, so we can do a detailed analysis, and the system will support you to take a good decision on the right time. And see everything for a new customer acquisition, what will be the cost in this area, and if it is going in a different area, how it will be. And okay, the turnaround, everything we can give you a result in the dashboards and reports and all. No need to take any guesswork for this. We have the data. We can give you in any format. That type of services we are providing in NBFCs, and they are using also taking these decisions and all.
That's interesting. Taking the guesswork out of decision making is very critical, and more so in today's time where the world is so volatile. Both positively and negatively. Negatively, we have examples.
Yes.
But positively, all the government schemes that are making a positive impact and opening up opportunities. Yeah, I don't think guesswork can deal with those kind of things at scale. Great. Thank you. Let's go on there. Yeah. So, when it comes to dealing with existing customers, there is CRM. Okay. But when it comes to dealing with new customers, there's no CRM as such, or the CRM is not yet ready for them. So your loan origination system has to then have some kind of CRM functionality or CRM features to be able to work effectively with those customers who have not yet come on board. How do you then, how are you enhancing or how are you wanting to enhance your LOS so that it can behave more like a CRM for new customers? And or is it entirely manual or there is some intelligence and automation in it that you want?
Take the opportunity to answer this question. Basically, we totally deal in digital lending, where you need to more focus on how your app interface is, how you can, how you measure your customer experience on your app, and what are the the options you are giving in your application. So first of all, I would say that our app having more than 5 million downloads, and the size of application is also like less than 10 MB. So it don't consume much data as compared to other applications. And so it clearly mentions which NBFC is associated, is a PC Financial Services. So there are, various Google policies and RBI guidelines which you need to follow and give a clear picture to your customer that what rate of interest you are offering, what will be the tenor of the loan, what will be the APR, and this, and what will be the your contact details, how the customer can reach you, because that will give you the two-way communication to your customer and comfort that in case of any problem he face, he can call. How quickly you resolve your customer complaints and queries. So all these things matters when you onboard your customers, and generally it takes around 30 minutes time, average time to disburse a loan, where everything is handled by artificial intelligence. There is no any manual intervention in that. The customer just upload his KYC details with the selfie and all, and our systems do the the CIBIL check, the bureau check is done from the back end, and we see from other, from this bank statement analysis and his credit history with us and other lenders. So that the way we do the scoring and decide whether to give loan or not to that customer. And so once everything goes well, so the money is disbursed. So we generally say that we serve the people when they actually need the money. It's not like the other institutions or maybe the banks and the customers. I don't want to quote, but people has to wait for multiple days to get their loan sanctioned. So I think those days are gone now.
Yes.
So people are ready to pay, to take the loan and they repay the loan as well, if the need is met on the right time.
Okay. So speed, you're saying, is a CRM element that you have built in, speed and turnaround time to engage customers better. Jay and Anjali, any other kind of CRM elements that you see for engaging new customers?
Manoj, it's like, you see, it's a buyer's market. It's not a seller's market today. Okay. So there are multiple people lined up to offer product to the customers. So, and one of the biggest challenges which most of the lenders are trying to address, and this is something that we are doing as part of our digital LOS journey, is leads come in and then leads are not used effectively. So you can do a marketing campaign, you can do an FB campaign, you can do a LinkedIn campaign, leads will pour in. But to make sure that each lead is attended to, either positively or negatively, either we address the customer whether he wants it, give the money to him, or we tell him you're not eligible, does not happen. Leads just get fallen through the cracks. And it also happens in banking scenarios where they will only let the leads or use what they want and they don't bother about the other leads. Okay, so that's where I'm talking about the way the CRM and the way you're asking about the CRM. So largely what is critical, and I think what needs to be addressed is every lead that comes into my system has to be attended to. It has to be assessed. It has to be evaluated. It has to be scored. and then decided saying that, okay, fine, this guy is eligible for a loan, this guy is not eligible for a loan. And you go back to the customer and say that, okay, fine, we find that your parameters. Today, that does not happen in most of the organizations. That's where, if I have to tell you, most of the banks are trying to tie up with fintech guys and with NBFCs, saying that, okay, fine, we have, our lending is, let's say, X and above. Any lead that comes for X and below, we will pass it on to you. So there's a referral model, there's a commission model, there's a, all those things keep happening. That's the co-origination or a referral model, which most of the banks and NBFCs and fintechs are getting tied up for. So as you rightly said, CRM for a customer starts when he enters it, and he kind of continues to be when he becomes a customer, and then his life, and then he's mapped in the system, and everything of the customer gets. The pre-onboarding of a customer in a CRM today is largely lead generation, and then you push him out into the system saying that he's not eligible. How many of us actually save that lead and say, go back to him later on when we have some other schemes and say, are you interested in this? Which is where, like Ken's, the intelligence system will say, okay, fine, comes back after 6 months and says, or suppose, let's say a credit score has gone bad. Go back to him after 6 months and say, okay, fine, if this credit score is important, do you need some other loan? Those kind of stuff, I think maybe people are doing it, but that kind of industry maturity is yet to come in, because one of the stuff that you keep hearing from most of the banks is, when we tie up with banks, is banks neither they do use their leads, nor do they give it to anybody else. It just falls
either here nor there.
Yeah.
That's bad.
Yeah. So the pre-onboarding CRM is something that now most of the lenders are, especially the NBFCs and fintechs, are getting into, and see how we can actually go back. And obviously, like, the AIs are used, the data churning is used, the massaging is used, and then, you go back. That's a space which is evolving. Okay, I don't know anybody has evolved in that level, but yes, something that I'm trying to also see how we can do it in our organization. So
it's a very interesting issue, and given that we have so much IT, it is still happening, is really sounds crazy. Anjali, any third point to perspective to add?
I totally agree with Jaya. It's a very good point which she has put forth, that we are that these leads are going into cracks, and we are not using artificial intelligence and data analytics perfectly in that space, which lending institutes have to deep dive and start being proactive than reactive.
Okay. So is this a technology problem, or is there something you guys can help any of the NBFCs?
Yes, of course, especially on the customer analysis part. No, that's for the lenders are looking for this customer analysis part. See, ma'am, we can, once you are able to share the data, no, I can give you a very short POC. In a couple of weeks time, I can tell you, okay, in your high value customers, okay, these are your high value customers list. Out of this, these people, maybe 10%, I can name the customer, and okay, these people will leave your company in this month of time. In that way, I can tell you. That type of intelligent mechanisms we have nowadays. No, so we are also using this AI ML tools and all. But see, based on the data analysis, yes, of course, very simply we can classify the customers into high value customers and low value customers. As JMM said, no, yes, yield is one of the factor. Yes, some other factors also we can add. All these things we can share you. Okay, these are the parameters that we consider for these classifications and all. And in this high value customers, okay, these customers will leave your company in a couple of months' time. Likewise, I can highlight you. And yes, again, we have the lead data analysis. Based on that also, periodically, again, we are doing the credit check of these things and all. I mean, this lead data and all. Based on that, again, our engine will recommend, okay, these are the recommendations for this customers. Yes, again, we can send some alerts. And I mean, we can check the status. Likewise, we are adding, and nowadays, no, we are, yes, we are, I mean, customer lifetime value. And we can suggest, we can predict, okay, this customer journey, like journey with you. Okay, this customer will be with you based on your current schemes till this time. Currently, the customer may be with you for a mini hatchback, and system will tell you in 3 or 4 years time, this customer need a house, for they may be required a housing loan. After 5 to 10 years time, yes, they may be looking for a family car. And likewise, see, based on the services, based on the transaction pattern, based on the customer social media and other mobile data analysis, we will say, okay, this customer will be with you in this time, till this time. And they may be required around these loans by the time. Likewise, I can predict that type of system we have in the system. So, and one of the leading NBFC in India, no, we did POC and they said, okay, you predicted these things in 80 to 90% accuracy. We have predicted only 2-3 conditions. Yes, they said, yes, you are saying correct. It's around 80 to 90%. What you said is correct. Likewise, predictions we can do in the customer analysis part. These type of analysis are happening nowadays. Yes, as Raghuveer said, no, so many ML technologies are there. Yes, we are also using that, and how we are adopting that, that's the important thing.
It's not just the technology itself, but because AI, ML everyone has, but how you fit it in. Okay.
Yes, correct.
By when do you think you'll be able to adapt Maslow's hierarchy in your business? And so 1 year, 2 years, 3 years. And what is the better outcome you expect to have once you do that? Half a minute if each of you can respond.
Manoj, since you have said this, I don't think we have looked into this in terms of a product building, but yes, it's a good start point, and I think it's a good idea to kind of bring this to the table for the product development team. It's a good idea. I think something which we can take as food for thought, for the food for action, not food for thought, food for action. So,
I like that, food for action.
Food for action.
Good. All the best on that journey. Raghuveer, what is your thinking?
Yeah, so that's a good, the conversation happened and give a good idea about how to see from the customer angle side also, and to how to, help him in the various part of his life and his journey, that how you can pitch your products so that he can be associated with you, with, you also grow with his life journey and offer him products which help each other.
Great. I look forward to updates from you in the future as you adopt Maslow's model or whatever other model makes sense. Anjali, what would you say?
I think initiation has happened here. So let's see, we have to travel a long way for self-actualization. And so we are just initiated now. So it's a long way to go, and it will be a continuous journey. I think it's quite a good start here to
That's
even think that way.
Yeah, when I first really understood Maslow's hierarchy, it felt really empowering, as if enlightened, as if I've got enlightenment or something. It's so fundamental as an analysis of human mind and the working of the human mind.
Yeah, totally.
So, Kenils, what is your thought? What do you see the industry adopting this Maslow's model?
Yeah. See, we are also doing so many R&Ds, so many things. Now, see, what I said is what we implemented. That's only we discussed. So many things are in pipeline to support this NBFC, and they need to reach the top level. No, that's why we are doing so many R&Ds to help them to reach that level. So many things. I'm not saying a single, so now based on the current industry and the coming things, no, based on that, so many R&D, so many analysts working on that, and based on that, refining, and so many, see, open bank, so many things are coming in place. No, I'm not mentioning anything for the time being. So we are also doing R&D to reach that level. No, take our customers to that level. That's my point.
That's great. That's great. I'm happy to see that the industry itself, the NBFC industry, the lenders, and the technology guys who are enabling all this, so really working in sync, having very similar ideas, having lots of new ideas, in fact. That's what all these fintechs and startups are doing. I think there's going to be really interesting days ahead. I think there are going to be more panel discussions like this from our side to just keep up with all the new opportunities and new thoughts. Once again, from our side, from Banking Frontiers, thank you everyone for being a part of this wonderful panel discussion. Really appreciate having you here. Wish you all the best, and see you again sometime on a similar topic.
Thank you, Manoj. Thank you. Thank you, your entire team. Thanks a lot.
Bye.
Yeah.
Thank you. Bye-bye.